Markets breathe again. Wall Street rallies as Washington nears shutdown deal. Welcome to Pie Uncut Investing Today. It's Monday, November 10th, 2025, and after 6 tense weeks of political paralysis, Wall Street is finally seeing a ray of hope. The S&P 500 is up 1%, the Nasdaq is leading the way with 1.6% jump, and the Dow has climbed modestly by 63 points. Why the optimism? Because Washington, after the longest shutdown in U.S. history, is showing signs of movement. Segment 1, the shutdown that froze the economy. Let's rewind. For nearly 7 weeks, the U.S. government has been at a standstill. Thousands of federal employees furloughed, data releases like CPI and PPI delayed, and consumer sentiment at its lowest level in over 3 years, according to the University of Michigan. This isn't just politics. A prolonged shutdown strangles liquidity, freezes government contracts, and rattles investor confidence. For the markets, uncertainty is poison, and the past month has been a case study of how quickly optimism can evaporate. But today, hope is back on the trading floor. Segment 2, Washington moves toward a deal. Over the weekend, Senate lawmakers took a key step toward reopening the government. A procedural vote passed with at least 60 senators in favor, including 8 Democrats who broke with party leadership to support the compromise. The deal, still awaiting final votes in both chambers, would reopen the government until January, reverse recent mass federal layoffs, and include new job protections for public employees. But it notably excludes the extension of Affordable Care Act subsidies, a sticking point for Democrats. That issue is now pushed to a December vote. House Speaker Mike Johnson has already called members back to D.C., signaling that the vote could come as soon as this week. If all goes as planned, the government could reopen before Thanksgiving, a relief not just for federal workers, but for markets around the world. Segment 4, Wall Street cheers, AI and tech rebound. The moment Washington showed progress, investors rushed back into risk assets. AI leaders like Nvidia and Broadcom were the first to rally. Nvidia popped nearly 4%, its best single-day gain since late October. Microsoft, after 8 straight sessions of decline, its longest losing streak since 2011, finally turned positive, up 1%. The AI trade, which looked shaky last week amid valuation worries, found new legs today. As Orion CIO Tim Holland put it, "It's been a bumpy November, but one of the 3 big concerns, the shutdown, may now be off the table. That's a big deal." Investors are still uneasy about AI valuations, but the combination of potential fiscal clarity and a supportive Fed outlook is rekindling optimism. Segment 5, the Fed factor, a December cut in play. While Congress fights over spending, the Federal Reserve is quietly setting the stage for easier money. Fed Governor Stephen Miran said Monday that a half-point rate cut could be appropriate in December. His reasoning? With growth cooling and inflation stable, it's time to prevent over-tightening. Even a quarter-point cut would mark the start of a new monetary chapter, one that could fuel a year-end rally. Add in seasonal tailwinds and earnings growth near 13% year over year, and you have the perfect setup for a rebound in risk assets. Segment 6, Global Signals. India back in focus. In global markets, Goldman Sachs just upgraded Indian equities back to overweight after a year of underperformance. The call signals that emerging markets could re-enter investors' playbooks as U.S. growth slows. Goldman's analyst Sunil Kool pointed to improved liquidity, policy support, and easing trade tensions with the U.S. In short, foreign investors may be ready to redeploy capital into growth-heavy regions that have lagged. Segment 7, Winners of the Day. Let's take a look at today's headline movers. Nvidia, NVDA, plus 4%, leading the AI rebound. Microsoft, MSFT, plus 0.7%, ending its 8-day slide. MP Materials, MP, plus 9% after a Deutsche Bank upgrade citing rare earth supply chain tailwinds from U.S. defense policy. Palantir, PLTR, plus 3% clawing back from last week's AI-driven correction. Instacart, CART, plus 8% pre-market after beating Q3 earnings expectations. Airlines, American, United, and Delta all rose around 2%, buoyed by hopes that flight cancellations and travel disruptions will soon end as the shutdown lifts. Even Pfizer made headlines, striking a $10 billion acquisition of obesity drug developer Metsera, fending off rival Novo Nordisk in a high-stakes biotech duel. It's one of Pfizer's biggest M&A plays since the pandemic, and a sign that Big Pharma sees obesity drugs as the next trillion-dollar frontier. Segment 7, the tariff wildcard. Beyond Washington's spending drama, another market-moving story is unfolding at the U.S. Supreme Court. Justices are reviewing the Trump-era tariffs that have reshaped trade with China and Europe. If the court strikes them down, JP Morgan says it could trigger a broad-based rally in risk assets, especially in emerging markets and Eurozone exporters that have lagged by more than 15% this year. Combine tariff relief with rate cuts and government reopening, and you've got the makings of a synchronized global risk-on environment. Segment 8, the investor mood shift. For the past month, fear dominated trading desks. Talks of overvaluation, whispers of an AI bubble, and growing frustration with Washington's dysfunction. But today, the psychology shifted. It's not that problems have vanished, valuations remain stretched and macro uncertainty lingers, but investors now see light at the end of the tunnel. If the shutdown ends, if rate cuts begin, and if tariffs ease, the next few months could resemble a mini soft landing scenario. Slowing inflation, steady growth, and renewed corporate optimism. Segment 9, what investors should watch next. Here's what's on the radar. Final Senate and House votes. Markets will respond instantly to any confirmed reopening deal. Fed minutes later this month, a clue to whether Miran's half-point proposal has broader support. Earnings momentum. With Q3 behind us, attention shifts to how companies guide into 2026. AI sector rotation. Will leadership expand beyond the Magnificent Seven? China-US trade dynamics. Rare earth export restrictions and semiconductor flows will remain in focus. Segment 10, the takeaway. So where does this leave investors? After 6 weeks of anxiety, markets are remembering what relief feels like. The S&P's rebound may look modest, but psychologically, it's massive. It signals that confidence, the fuel of every bull market, is still alive. But the next phase won't be driven by politics alone. Corporate execution, rate policy, and global trade alignment will determine whether this rebound becomes a rally or another head fake. For now, the message from Wall Street is simple. Don't fight the Fed, don't bet against the U.S. economy, and don't underestimate the power of clarity. Because sometimes, just the hint of progress in Washington is enough to make the bulls run again. This has been Pie Uncut, your daily market voice. I'm your host, breaking down the data behind the drama. Stay tuned, stay invested, and remember, volatility isn't the enemy, it's the entry point. Until next time, thanks for listening.